Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, a further delay in the wage hike for Metro Manila workers as the Pasig court stops its implementation. Carlos Miguel Oñate of the Trade Union Congress of the Philippines joins us live. Fuel will be more expensive next week after global oil prices went up as hopes for a peace deal fade. And with a 12.5% tariff now enforced, are Philippine exporters losing ground, or are exemptions and stronger U.S. demand helping cushion the blow? Former Tariff Commissioner, economist George Manzano joins us for his insights. The Pasig City Regional Trial Court Branch 152 has issued a writ of preliminary injunction extending the suspension of the 85 peso daily minimum wage hike in Metro Manila. This comes after the court's initial temporary restraining order expired yesterday, August 13th. Presiding Judge Marie Joyce Mangosong said the court granted the prayer of Redicon Trading and Construction Corp. and R2 Builders for a writ of preliminary injunction against the wage hike with a 10 billion peso bond. The order continues to suspend the implementation of the NCR Wage Order number 27 pending the court's determination of the merits of the petition. The first tranche of the wage increase, amounting to 60 pesos, was supposed to take effect on July 25th, followed by an additional 25 peso increase scheduled for January next year. The injunction suspends NCR Wage Order number 27 while the Pasig RTC decides on the merits of the petition filed by the two construction firms. With us now for more is Trade Union Congress of the Philippines spokesman Carlos Miguel Oñate. Welcome back, Carlos.
Good morning, Cathy. Good morning to all our viewers.
So the Pasig RTC has issued a writ of preliminary injunction against the wage order. What does this mean for workers who were expecting the 60 peso first tranche?
This is an extremely bad news and an unprecedented injustice against the workers of this country because those things that we will have to pay for, utilities, food, and all other expenses, cannot wait until the court resolves the case and lift that injunction. Clearly, this court has no jurisdiction over this wage hike suspension petition of these two construction companies. It is very clear in Article 126 of the Labor Code that no injunction or temporary restraining order can be issued against the proceedings of the Regional Wage Board. And if they have a problem with the wage order, then they have to appeal it in the NWPC. Clearly, the petitioners did not do that. Clearly, the court knew that but still ordered the injunction anyway. But this is also an affront to the government because we have the Wage Rationalization Act of 1989. It has been there since 1989, 37 years, and never before has an injunction or even a TRO been issued against a lawful wage increase order.
Right, we're just taking a look at exactly that law, Article 126, right on your screen. The Wage Rationalization Act barring courts from issuing injunctions against the proceedings before the NWPC, Regional Wage Board. So what do you intend to do as TUCP?
Yes, we would be exhausting all the available remedies, but take note, of course, that it is the great irony of this case. The wages are on trial, but the workers are not considered an official party to this case. Until now, our motion to intervene remains pending and is even opposed by the petitioners. So in the meantime, we urge the Office of the Solicitor General to immediately file a motion to dissolve the injunction so that we can lift this as soon as possible. But if necessary, we are prepared to go all the way up to the Supreme Court for a petition for certiorari or prohibition to essentially not only trash this injunction, but also to order all courts to inhibit from even entertaining any petition against a lawful wage increase order.
And in the meantime, Carlos, what are you expecting from Dole and the Solicitor General?
We urge the Department of Labor and Employment first to provide guidance on how do we go about this. We have been also urging them that they can issue a labor advisory reminding employers of their social responsibility, that they can actually voluntarily grant wage increases. There is no legal obstacle for employers to voluntarily grant the wage increase, and many employers, and we salute them, have been doing that since July 25. The Office of the Solicitor General, we urge them to file the necessary motion to dissolve the injunction or to also support our motion to intervene so that workers have a seat at the table in that Pasig RTC Branch 152 to argue the case, because it is workers that are the primary affected by this wage increase order suspension.
Well, from the view of the petitioners, they're saying that the increase could harm businesses. Why does the TUCP believe that workers should not be made to carry the burden of this legal fight?
Yes, it is the two petitioners, those two construction companies who, of course, availed of billions of government projects. It is hard to believe that the 60 pesos would be of grave injury to their operations. Even if they say their expenses will increase by hundreds of thousands, we know, of course, that their revenues are in the range of billions. And workers should not be made to pay the price of this suspension which the petitioners sought. It is now of grave and irreparable injury to the workers who are not a party to this case, who are already given the lawful wage increase order since July 25. So it is of graver injury to the workers rather than those two construction companies who only have hundreds of employees.
But there is that 10 billion peso bond. The court required that bond from the petitioners. What protection, if any, does that provide to workers?
Yes, but we are of the view that the 60 pesos suspension since July 25 should only be on hold for the employers. So they should not use that for other expenses or other operations that they have. They should keep that on hold, because we still believe that anytime that injunction will be lifted or reversed, that they should pay immediately the 60 pesos since July 25. We have already computed the cost of that 20-day TRO to collectively the 1.1 million minimum wage earners. It already collectively costs 1 billion pesos, more than 1 billion pesos. So we also express concern because of the 10 billion pesos bond, because the case may take a long while before it is resolved, and workers cannot afford to wait until such time that the case is resolved before they get the 60 pesos increase.
So how much bigger of a loss would that be? We're coming from 1 billion already, according to your calculations. If it does take until maybe January, when the second tranche would have had to happen, how much would it cost workers?
Yes, for an entire month, so that would be 1.6 billion is our computation. So if it continues to last longer than 6 months, so it would be very big for our workers. So I think this is also a wake-up call for Congress and for no less than the President to certify as urgent a legislated wage increase, because it appears to us that is now the only remaining path to raise the wages, not only of the workers in Metro Manila, but across the country. It is clearly we have no other choice but a legislated wage increase at this time.
And how much of a legislated wage hike are you expecting for the government to propose?
The currently pending in Congress right now is the 200 pesos legislated wage increase that is already passed by the Senate and by the House of Representatives. So we hope that that is the bill that will be certified as urgent. It needs to be passed. After all, that's the lost purchasing power of workers after these 37 years of a broken regional wage board, which now is essentially rendered powerless by these endless court petitions and injunctions.
All right. Well, thank you so much for the update, Carlos. Much appreciated. Carlos Miguel Oñate of TUCP. A heads up, motorists, a new round of oil price hikes loom next week. Based on the 4 trading days of Mean of Platts Singapore, prices in Forex rates this week, diesel will likely increase almost or a little over 4 pesos per liter. Gasoline by up to 3 pesos per liter. Jetty Petroleum President Leo Bellas cites lower optimism about the opening of the Strait of Hormuz in the Middle East as the main driver for the higher prices. Bellas adds tighter global supplies and refinery disruptions also push up gasoline and diesel prices. In an interview on The Big Story, Energy Secretary Sharon Garin says fuel prices remain difficult to predict and are likely to stay volatile.
If you notice, if somebody bombs a facility, akyat siya kaagad, ano? Or like when they say, oh, we're going to on peace talks, bagsak kaagad yung presyo. It's really reacting to how the...
It's
how
very
the-
volatile
they-
still.
Yeah, I can't predict really what's going to happen. What we can control lang actually says is how we react to such changes, ano. So that's why we've been pushing for conservation, less consume less electricity, mga ganun lang makokontrol natin. But and hoarding, but on the price it's really difficult to predict.
Traffic through the Strait of Hormuz remains minimal despite U.S. President Donald Trump's claim that the vital waterway is open and under U.S. control. Prospects for a deal between the U.S. and Iran remain uncertain. An Iranian official warns the conflict could drag on until Trump leaves office. As of 8:30 a.m. Philippine time, benchmark Brent crude trading at a little over $87 a barrel, down by less than 0.1%. And West Texas Intermediate priced at around $81 per barrel, also down by less than 0.1%. PLDT Chair Manny V. Pangilinan says he has yet to see concrete details on the proposed Pac Silica initiative. The proposed Pac Silica hub is expected to take up 1,620 hectares in New Clark City, Tarlac, and is envisioned to be an AI and manufacturing hub. Pangilinan had previously said he sees a clear business case for PLDT to get involved given its expertise in data centers. He now says he will meet with Basis Conversion and Development Authority, or BCDA, to get more details on the project.
I think definitely data centers will be part of that overall development of in Tarlac, no? And also we need the manpower, the IT engineers who will push the development. Do we have enough local talents to do what's needed to be done? No? You may have to complement that with foreign talents. So we just need to know more about it so that we know where we can help BCDA create this Pac Silica.
You're watching Money Talks. Coming up, how will the new U.S. tariffs affect the competitiveness of Filipino exporters? We speak with economist and former tariff commissioner George Manzano. And telco giant PLDT Inc. is looking to bounce back in the second half of the year after reporting a dip in its first half earnings. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. Philippine exporters have spent more than a year navigating a U.S. tariff roller coaster. 17%, then 20%, down to 19%, and then 10%, and now 12.5%. The question now, does the latest tariff regime leave Philippine goods less competitive in the U.S. market? With us now for more, former Tariff Commissioner economist George Manzano. It's good seeing you again, George. Welcome back to the program.
Good morning. Thank you, Cathy, for having me here, and welcome to our viewers also.
All right, so more than 1 year since the first U.S. tariff actions began, and I know we had this conversation over a year ago. How have tariffs affected the Philippine economy, the exporters, as well as employment?
Well, there's a difference between headline tariff and the effective tariff. The headline tariff right now started with Independence Liberation Day, rather reciprocal tariff of 17%. It went through, ups and downs, and now we have the 12.5% tariff on Section 301 on inputs of forced labor. The headline rate does not tell the story. When we talk about competitiveness, we have to think that it is always relative. For sure, a U.S. tariff of 12.5% will put Philippine exporters at a disadvantage against American producers. But when we compare the Philippines, we talk about competitiveness with other foreign suppliers, what really matters is the difference between the tariff that they face and the tariff that is imposed on us. Now,
Well,
this
let's pick up on that. The current one is at 12.5%. We came all the way from a much higher rate. But we've seen that Philippine exports to the U.S. have continued to grow strongly, and it's driven largely by semiconductors. So would you say that this tariff impact has been more limited than initially feared?
I can say yes, because product exemptions matter just much. In other words, the headline tariff, let's say 10 or 12.5%, does not mean that every Philippine export entering the United States is subject to that rate. Exemptions matter a lot. And for that reason, we have plenty of products that are exempted from the additional tariffs that the Trump administration has imposed over our usual, what we call MFN tariffs. For instance, plenty of semiconductors, you have agricultural products like coconut oil, sugar, pineapple, or certain minerals. So that the additional tariff will only impact those products that are not exempted from that rule. And according to DTI, that covers around upwards of 40% of total exports to the U.S.
True. So does
So in
that mean
effect,
because
yeah,
of the expansions we were able to gain some ground? I mean, how does the
yes.
weaker peso also work into that equation?
The weaker peso definitely is working, except that when it comes to semiconductors, we also have a lot of imported components on those. So therefore, a weaker peso would make our imported components that would go into our export also a bit pricier. But overall, of course, a weaker peso would be favorable to the export sector.
It is, and we're seeing the open in the peso now at 61.40, a lot weaker from the previous close of 61.343. I wanted to get back on 12.5 because that's a unique kind of tariff, if you will. There are about 37 countries, and amongst that, the Philippines. But first, how would you quantify the impact of this exposed labor-intensive sectors like garments, leather, travel? Because these account for at least 34% of Philippine exports to the U.S.
Definitely. First of all, regarding our competitors, there are around 60 countries that have been slapped with between 10 to 12.5% Section 301 tariff. So if 60 countries, we're really talking about a differential of 2.5% between the Philippines. Now, we talk about our rivals in the export market, such as Thailand and Vietnam. They're also slapped with 12.5. So as far as competitiveness is concerned, our relative positions are pretty much the same. They don't have advantage over us. We don't have advantage over them. The other ASEAN countries in which we compete, like Indonesia, Malaysia, Cambodia, they have 10%. So the difference is really just 2.5%. But 2.5% may matter in very labor-intensive products that are generic, that are not really branded but contract manufacturing, and so that may uh, that may harm those products, no? And especially if they are medium and small industries who have less bargaining power with their contractors.
So given the two treatments for the 12.5% tariff, what sort of policy response or responses should Manila prioritize now? Is it secure a lower rate or pursue additional exemptions, or maybe even prove that we're compliant with the forced labor linked imports?
Well, of course, nothing will prevent us from pursuing the two paths of uh, looking for more exemptions and securing a lower rate. But securing a lower rate would mean that we need to pass a policy on basically implementing greater scrutiny on imports of products that use forced labor. It has something to do with traceability and customs procedure on those issues. But I think the bigger problem here is the uncertainty. No? Uncertainty. We've seen a roller coaster changes, and all of these things is not very good for business. No? When you have uncertainty, you do not know. It's very difficult to plan, very difficult to keep on adjusting your supply chain. And right now, the biggest issue that looms in the near term is what we call another round of tariff that is on structural overcapacity on countries. Luckily, the Philippines is not on that list, but if that additional tariffs would see the light of day, then that would again disturb the international trading system. And we are looking at possible diversion. Countries that are slapped with these tariffs, they have products destined for the United States, and those products might be diverted to third countries such as the Philippines.
Okay.
And that will provide pressure on our local producers.
All right. Well, the only constant is really the uncertainty there. Thank you so much for your insights, George Manzano, former tariff commissioner. Let's take a quick check on the Philippine peso again, see how that's open this Friday. It is weaker, 61.40 to the dollar. The peso weakened against the greenback on Thursday as hopes for a U.S.-Iran peace deal faded amid an impasse between the two sides. The peso fell 16.3 centavos to close at 61.343 pesos to the dollar from 61.18 on Wednesday. That was its weakest close in 2 weeks or since July 30. U.S. stock futures are a mixed bag ahead of the July inflation data. The Dow and the S&P 500 gained 0.1% each, and the Nasdaq slipped by 0.1%. Asian markets likewise trading mixed and early Friday morning. South Korea's Kospi advances more than 2%, Japan's Nikkei 225 climbs over 1%, and Australia's ASX 200 declines 0.7%. U.S. markets rose Thursday as investors pulled back on expectations of a U.S. rate hike. The Nasdaq gained 0.8%, S&P 500 advanced about 0.7, and the Dow edged up 0.1%. Philippine shares slid back to the 6,200 level on Thursday as investors took profits after a two-day rally, while a weaker peso also weighed on sentiment. The PSEI fell more than 1% to close at 6,288. The broader all-shares index also declined, with most sectoral gauges in the negative. The 10-year government bond yields ticked up to 7.353%. Telco giant PLDT Inc. is looking to bounce back in the second half of the year after reporting a dip in its first half earnings. Chairman and CEO Manuel V. Pangilinan is banking on the momentum in data centers and its digital banking arm Maya to help drive growth. Our mobile journalist Fatima Baduria breaks it down.
PLDT Incorporated's core income slipped 2% in the first half of the year, weakened by a challenging economic environment in that period as well as higher expenses. The telco today reported it earned 16.6 billion in core income, down from a little over 17 billion a year ago. Breaking down the numbers, Gross service revenues rose by the same amount, 2%, to 108.7 billion pesos. The figure was pulled up by the enterprise business as well as data and fixed wireless. But expenses also climbed, rising faster than revenues at 4%, or about 84.8 billion pesos. Higher amortization and depreciation also ate into earnings. Nevertheless, EBITDA inched up 1% to just a little over 56 billion pesos for the period. Still, despite macroeconomic headwinds, PLDT Chairman and CEO Manuel V. Pangilinan remains optimistic for the second half of 2026.
We share the hope that the second half will be better than the first half. No?
One area that's been a surprise upside, data centers.
The data centers are doing well because you have local locators and foreign locators that are starting to come in or become aware of the potential of the Philippines as a data center hub. So they're not subject to our GDP growth. Diba?
Yes.
PLDT is targeting the fourth quarter for what could be the Philippines' first data center IPO, worth over 24 billion pesos. Overall, core income for PLDT held steady at 17.3 billion pesos, pulled up by the sustained profitability of Maya, its digital banking arm. As of June 2026, Maya's deposit balance jumped 71% on year to 86 billion pesos, while loans outstanding shot up 56% on year to 39 billion pesos. For the first half of the year, PLDT's capital expenditures dropped to 20.7 billion, lower than the 27.4 billion it had set aside. Asked about the profitability of PLDT's sister media companies, Pangilinan said he expects them to do better this year too, and the next step is to invest in more content.
Doing better this year, especially Signal, which lost money last year, no? So cut back on expenses, etc. So Signal should do better this year, and can help TV5. TV5 itself, yeah, slightly better. So with Vice Ganda and some other content.
The chairman was also asked about rumors he was in talks to invest in ABS-CBN, which has indirectly received a lifeline from fellow tycoon Ramon Ang, who bought into its parent firm Lopez Incorporated.
Okay.
There are no discussions. There are no. We're not thinking of anything with ABS, except the arrangements where they show some of the content. Black time or I don't know, co-prod situation, and yun lang. That's the arrangement now, and that's how I foresee it. Because I think I read on Bloomberg before I left for here that the headline, ABS raising about 6 billion.
From the family.
Oh, so that's good. Good for them.
Kapatid Fatima Baduria, We Are One News.
And before we go, here are a few things to check out this weekend. First up, Singaporean designer and Open founder Nicholas Tan makes his contemporary art debut in Manila. His first exhibition opens at 125 Projects Gallery in Mandaluyong, which runs until August 30. Tan's signature asymmetrical handbags have been spotted on celebrities. Now he is taking the iconic purpose bag out of fashion and into sculpture and installation. In cinemas, catch Just Javier. The film follows Javier's notorious Milan's Del Bosch. He is a young Spanish aristocrat and a promising tennis player who gives up his successful life in search of life's deeper meaning.
En estos niños pobres he visto el rostro de Dios. Ahora el reto es, ¿qué vida quiero tener en adelante?
Also on the big screen, The End of Oak Street, starring Anne Hathaway and Ewan McGregor. The film follows a family whose neighborhood is mysteriously ripped from suburbia and transported to an unknown place.
How the hell is that even possible?
Get out of there! Run!
What the hell's going on?
Get inside now!
I just heard a gunshot.
Doesn't look like suburbia. That is it for Money Talks. I'm Cathy Yang. Catch us again Monday at 9 a.m. Kapatid, we are One News. Your side, all the time. Morning Matters returns at 9:30 a.m. Have a great day ahead. I'll see you Monday.